Listen up, folks. Investing isn't just for Warren Buffett and those Wall Street hotshots. It's for everyone, especially you. The earlier you start, the better. Why? Two words: compound interest. It's like magic, but with money. The longer your money's in the game, the more it grows. It's like a snowball rolling downhill, getting bigger and bigger. Don't wait until you're old and gray to start thinking about your financial future. Start now, even if it's just a few bucks a week. Trust me, your future self will thank you. It's like planting a tree. The best time was 20 years ago, but the second best time is now. But hold your horses. Before you go throwing your hard-earned cash at every hot stock tip, you need a game plan. What are your goals? Retirement? A down payment on a house? A yacht? Whatever it is, write it down. Having clear goals will keep you motivated and on track. Remember, investing is a marathon, not a sprint. It's about making smart, informed decisions over the long haul. You know what they say? Don't put all your eggs in one basket. That's diversification 101, folks. You gotta spread your money around, just like you spread your bets in Vegas, but hopefully with better odds. Think of your investment portfolio like a delicious pizza. You want different toppings, right? Some stocks, some bonds, maybe a dash of real estate. This way, if one investment goes south, you won't lose your entire lunch. Now let's talk risk tolerance. How much risk can you stomach? Are you a roller coaster junkie, or do you prefer a leisurely stroll in the park? Your risk tolerance will determine how much you allocate to different asset classes. Stocks are like the spicy pepperoni on your pizza. They can bring the heat and potential for high returns, but they also come with more risk. Bonds are like the mellow mozzarella. They offer stability and balance out the spiciness. And hey, don't forget to stay informed. Read financial news, follow market trends, and do your homework before investing in anything. Knowledge is power, my friends. Stocks, the bread and butter of the investing world. But don't let the fancy suits and jargon scare you off. Buying a stock just means you're buying a small piece of a company. Think of it like owning a slice of your favorite pizza joint. If the business does well, your slice becomes more valuable. If it tanks, well, you might be eating ramen noodles for a while. So, how do you pick winning stocks? Research, research, research. Look for companies with solid track records, strong management teams, and products or services people love. And remember, patience is a virtue. Don't panic sell at the first sign of a market dip. Rome wasn't built in a day, and neither are great fortunes. Buy and hold, my friends, buy and hold. One more thing, dividends. Some companies share their profits with shareholders through dividends. It's like getting paid just for owning a piece of the pie. Sweet, right? Section 4, beyond stocks, ETFs, bonds, and other cool cats. Stocks are great, but they're not the only game in town. Let's talk ETFs, baby. Exchange-traded funds are like baskets of stocks that track a particular index, sector, or theme. Think of it like buying a whole pizza instead of just one slice. You get instant diversification and lower risk. Plus, ETFs are super easy to buy and sell on the stock exchange. Now let's talk bonds. Bonds are like loans you give to governments or corporations. They're generally less risky than stocks and provide a steady stream of income. Think of them as the reliable, boring friend who always pays their rent on time. There are different types of bonds: government bonds, corporate bonds, municipal bonds, you name it. Each has its own risk and reward profile. Don't forget about mutual funds. They're like ETFs, but actively managed by a portfolio manager who picks and chooses investments. Real estate, crypto, and other adventures. High risk, high reward? Feeling adventurous? Let's talk real estate, crypto, and other alternative investments. Real estate is tangible, you can touch it. Cryptocurrencies like Bitcoin and Ethereum have taken the world by storm. Crypto can be highly volatile, but also potentially lucrative. Alternative investments include private equity, hedge funds, and collectibles. Do your research, understand the risks, and invest wisely.